The start of this decade was great for mortgages, but bad for everything else. So it just created an increasing debt load that we're seeing year after year. Borrowers are just carrying more debt. Circumstantial, job markets are up and down. And it just creates more difficulty with credit card, debt loads, those types of things which tank your score. You can have a really large point swing when you start maxing out your credit utilization, and it's not reflective of who you are as a borrower, as a person. These borrowers are always there, but nobody wants to jump at them because there's a higher risk involved for the lender or the originator with defaults or whatnot. But there's also so many good borrowers who just have had bad circumstances. And we've been working in that market for years now. Credit Care is a free service offered by American Financing for any of our borrower base to improve their credit score in order to have the opportunity for loan qualification, whether that's a purchase, a refinance, or a rate and term, whatever it is that you're looking for. We bring our borrowers in, through our normal channels, and then we'll do their initial application. And at that point, we'll run them against AUS, which is an automated underwriting system, to determine if they have approvability where they're at now. So that means they don't have a current bankruptcy that hasn't met seasoning, or they don't have recent 60-day mortgage lates that we, have to wait 12 months until we can, lend against their credit profile. We'll take that borrower and run them through Credit Care. It happens pretty early on in the process. We ask them if they're interested in this service, again, completely free. If they agree to it, it goes to our Credit Care team, which is a team of 3 people that I have personally trained and developed in, how to review credit reports and what they're looking for. We either need to pay down credit cards, we need to open a credit card, we need to pay off these collections. We need to just wait 2 months. Sometimes it's just time seasoning from your last inquiries or last collection. Whatever that looks like, we build that out in a plan that's digestible by the borrower, and then present that to them and say, hey, is this something you can do? And then we just walk alongside you in that journey. Things come up, they'll be paying down their debt and their tires pop, and now they got to go to, the tire shop and buy $800 worth of tires. How does that going to impact to this? And we'll kind of rework the plan with them. Once we get to that end, we stick them back in the process right where they left off, which is usually just right before processing at sign off. And then we run them through the automated underwriting system again. And after all of that hard work, we end up seeing a majority of our clients get approved. We see a lot of success. Don't stand in your own way. That's the biggest thing. I'm constantly shocked at what we are able to get approved. We have a lot of repeat borrowers and some really cool success stories. I've had circumstances where we pay down a credit card and it's like $2,000 and they see a double-digit swing in their credit, and now they're not considered a disadvantaged credit borrower anymore, but it was just the difference of $2,000. I can think back a couple of years ago, had a lovely lady, and she was at a 560 credit score, and all she had to do was go to JCPenney's and buy a pair of socks because she had a JCPenney's credit card. And then once that reported the following month and she had a little bit of utilization in her credit report, she shot up 60 points, and she moved to that 600 range, which changes her credit bracket, changes her pricing, everything is different. 120 points in 30 days is the biggest swing I have ever experienced. And that was $3,700 in debt pay down over 8 credit cards, and just reduced their overall utilization in 30 days with all the natural reporting, right? Because your creditors will report typically to the bureaus on a 30-day cycle. So we paid everything down. It hits the credit report kind of one after another. They went from a 540 to a 660. It was awesome. And those are huge victories for me when we get those things, and I'm I want to cry, you want to cry. We got something accomplished here, and now we can move forward to what you really need, which is debt relief to buy a home. Financial timing and personal timing don't always align. Life happens, and we can work through that. We don't give up if you don't give up. And it's awesome. And there's really, that's, when I came on and was looking at, what can set us apart in the industry, that is what sets us apart, is that we truly do not give up. I love it. I think it's really awesome.